This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Iraq's oil minister and his Turkish counterpart did not reach an agreement to immediately resume Iraq's northern oil exports but agreed to hold more talks in the future, said two energy sources with knowledge of the ministers' meeting in Ankara on Tuesday. Turkey halted flows on March 25 after an arbitration ruling by the International Chamber of Commerce, ICC, ordered Ankara to pay Baghdad damages of $1.5 billion for unauthorized exports by the Kurdistan Regional Government, KRG, between 2014 and 2018. The bloc consists mainly of oil originating from Iraq's semi-autonomous Kurdish region.
Oil prices ticked up in Asian trade on Wednesday, as traders weighed weak demand indicators from top importer China and the prospect of further U.S. rate hikes against potential supply tightness. Brent crude rose 15 cents, or 0.2%, to $84.18 a barrel by 0600 GMT, while U.S. West Texas Intermediate crude was at $79.81 a barrel, up 17 cents, or 0.2%. Both benchmarks lost about 0.5% on Tuesday. Markets await hints on the outlook for interest rates when Federal Reserve officials and policymakers from the European Central Bank, the Bank of England and the Bank of Japan head to Jackson Hole, Wyoming, for an annual meeting later this week.
Moving on to the top news in the energy sector.
Iran's crude oil output will reach 3.4 million barrels per day, BPD, by the end of September, the country's oil minister was quoted as saying by state media on Wednesday, despite U.S. sanctions remaining in place. Our current crude oil production is 3.3 million barrels per day and by the end of September this amount will increase to 3.4 million, Javad Aoji said. In 2018, then U.S. President Donald Trump exited a nuclear agreement and reimposed sanctions on Tehran, whose crude oil output dropped to 2.4 million barrels per day on average in 2021.
South Africa and China on Wednesday signed deals covering emissions technology, electricity transmission and distribution, and nuclear power on the sidelines of the BRICS summit. The agreements are part of the South African government's efforts to end record power cuts that are a major constraint on economic growth. Electricity Minister Constitutes Ramokopa said one of the deals would see Chinese companies share technology to help South Africa's struggling state utility Eskom cut emissions from its coal-fired power plants.
Next, we have the top news in metal markets.
Gold prices gained on Wednesday after a slight pullback in U.S. Treasury yields underpinned bullion above a key $1,900 level as investors await clues from major central bankers on whether the end to their monetary tightening cycle was imminent. Spot gold firmed 0.3% to $1,902.49 per ounce by 0748 GMT, drifting further away from the 5-month lows hit last week. U.S. gold futures rose 0.3% to $1,931.10. A rally that took U.S. Treasury yields to nearly 16-year highs took a pause, giving some respite to the non-yielding gold.
Prices of most base metals trended up on Wednesday, following improved buying as China's efforts to stabilize its currency enhanced risk appetite, but gains were capped by a strong U.S. dollar. 3-month copper on the London Metal Exchange was up 0.5% at $8,401.50 per metric ton, as of 0711 GMT. The most traded September copper contract on the Shanghai Futures Exchange ended daytime trade 0.9% at 69,130 yuan, $9,487.41 per metric ton. We will now look at the top news in the agricultural sector. Russia targeted Ukrainian ports in the southern Odessa region and the Danube River area in overnight drone attacks, setting at least one grain storage facility on fire, Ukraine's military and local authorities said on Wednesday. The attacks were Russia's latest on port infrastructure on the Danube, which Ukraine uses to move grain to the Romanian port of Constanța, since Moscow quit a UN-brokered deal that allowed Kyiv to ship grain via the Black Sea. The enemy hit grain storage facilities and a production and transshipment complex in the Danube region. A fire broke out in the warehouses and was quickly contained. Firefighters continue to work, the Ukrainian military said in a post on the Telegram messaging app.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.